right, all right. So let's see. Let's give it a whirl here. Want to make sure everything is. Want to make sure everything is copacetic. We have a we have an extremely unique situation here tonight. What's interesting is I can't even hear myself, so this will be really interesting. Let's go ahead, hit me up in chat if you can hear me. Hello all. Throw that in there and see if we get any interaction there. Want to make sure that you guys can actually hear me. I have it's a bit of a different setup over here now, so please do let me know if you can. That would be great, and then we could take it from there. Right now we just have just kind of like a default daily Bitcoin screen, so to say. Chart is up. So let's see. Hey man, always bullish. All right, cool. Can you hear me? Do like the old Sprint, commercials. Can you hear me now? There's clearly a few things to figure out here, and again, not 100% sure why I don't have audio. Which is really bizarre. But again, we're gonna work with what we got here. We're on the road. All right. So let's see. Still waiting on chat to. Yes. All right. Thank you. Always bullish. All right. Very good. So are we on time? Yeah. 7:30 on the nose. That's fantastic. All right. And what else do we have here? Let me just double check a few things. All right. So here's the deal. Jacob is away for now. So I am, let's get some money. I love it. So I'm handling the stream, and it turns out that I am also away at the same time. So this is an on the road setup. A little bit haphazard, but all the wires are in the right place. Everybody's cool. Just want to make sure that there's no like major lag in between the chart and what I'm talking about. So I'll have to flip back and forth between chat. So, bear with me when it comes to stuff like that. I'm trying to make sure I can close a few of these windows out. But so long as I have chat open and I got you guys over there, then I could get rid of some of this stuff right here, which is just going to bog everything down. So let me just do that real quick. And if I have to reopen it, I will. No big deal. All right. So as long as everybody is on the same page here, let me pull this up so I can actually see it. Perfect. Okay, so let's get started. Bitcoin, right? So Bitcoin dropped. So Marubozu, the way these work, right? The way the candlestick represents itself is the bears being in control, right? Basically from the second the candle closed out. So 23 hours and 30 minutes ago, this candle started and just sold ever since. Now, the interesting thing about this is let's scroll over to our Bitcoin, the one with the white background, the one that you guys see on the updates, right? So let's put this into our view here so that we could see it. Now, we had a nice support zone level that we have right here. That's right where we came down into, right? Now, I'm still looking for something like this, but we sort of have to watch the buyback and see how people are reacting to it. Let me get rid of the volume. We will take note. Volume is above average, which is awesome. Up or down, we just like to have a lot of volume, right? We've been not so fortunate with volume lately, so getting any of it is appreciated. All right, so the way the daily broke down, this happened fairly early on, that buying, and we can see that on the 1 hour chart. So here you go right here. So the way this is looking, right, we came down, we stabbed it here, and since then we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, about 17 hours of buying. And now, there's selling in between here. This is what I wanted you guys to look out for, is this step down pattern, right? So essentially you have, you could take this and kind of do something like that with, right? And you're like, all right, well, clearly once we break, we dump. And then take the next few candles, and as they, start making their rounds, and then push, and then you'll get a dump. And then same thing, next few candles is what you'll use this for, essentially. And then you're looking for, the obvious level that breaks, and then another break to the downside. So if this changes, which it looks like it's doing right now, if it changes into consolidation, that's where you want to take note. So we want to do something like this. We'll grab a little box out, and we'll say, all right, well, top zone looks like we had some interest right here, right? Failed to break above and close, failed to break above and close, failed to break above and close, right up on the top, and another attempt with a failure. And then downside, looks like after the bigger push, we haven't even attempted that zone. So this would be much, much, much narrower, something like that. And we could just take this. We'll just make it orange for now, just so you can visually see it. Because if we zoom into, let's say, the 5-minute chart, you'll have a clear idea on the little ping pong zone that's going on there. So on the hourly, right now we're trying to fight to get our fast EMAs back, and that's these guys. You can see how far away they are from price. And then as, you start to go sideways or start to push up, they'll start to give you that support back. So they always want to be, in a bullish scenario, they always want to be just underneath the price, sort of propping it up. And in a bearish scenario, they always want to be just above price, sort of pushing it down. And right now, we're right in the middle of that candle. So we're trying, that's that black one here, right? We're trying, and right now it's just sort of adding added pressure to the price. It's not really allowing it to go up any further. Eventually, when that breaks on the bullish side, then we have targets to look for. Now, the red line, this is your 20 MA. Now, we are on the hourly chart, but you can see how it interacts with it right now. Currently acting as support. It's about top side 3/4 up into the candle. All right. Let me just double check this over here. Make sure we're cool. We're cool. We're cool. All right, everybody cool? All right, good. All right, let's keep it rolling. So, Bitcoin on the hourly, looking for another downside break, like a step down pattern, like we're doing right now. A little step, down, step, and then another downward break. If we get another downward break here again, expect another leg down, which would only make sense. We can't necessarily draw this yet, but we can get an idea of where things might be headed. If we're able to respect this sort of move, we'll know on the third touch where about that thing's headed. But this support zone is good, and it's ripe with orders. All right, people want to buy this zone. Plenty of orders stacked in the 9,000 zone. The 21 EMA, we could take a look at that right now. So let's go to the weekly chart. And then we'll pop our 21 on. So we're just going to rip these off. We'll throw our dedicated 21 on. And we'll take a look. Of course, this is going to change from the morning update as price changes. So it hasn't moved much. Currently sitting at 89.69. So that is a target, and it's absolutely something we're looking for. We are not out of the woods as far as, let's go to the 4-hour chart, as far as actually getting a bit of a pullback before further downside. If we are to stab these zones, it's not out of the realm of possibility that we push up. Now, it wouldn't be the 21, although it very well could be, but generally either the 20 or just getting those EMAs back. But here you are here. That's the 20. Your EMA is up at 96.20 on a 4-hour chart. Not a lot buyback, but if you were to come up to the 20, reject it, further downside, that would make sense. If we're going to do that, you're looking at 99.25 as the actual, area of interest. Now, an actual reversal here would come back to our trend we'd push up all the way to our trend. It would look very, very, very bullish, only to just turn around and give it all right back. So that's something that we've seen in the past, just in a wick. But that could happen in a 15-minute candle. We could come all the way up, and if we are to do it on, let's say the next 4-hour period, you're looking at retesting 10,100, which makes sense if it falls within this green zone here, because that was our support leg during our daily run. Something like this. So we could see how many times we were in that zone, right, and how difficult it was for the bears to close underneath that green zone. Very, very, very difficult, very strong zone. Once it broke, right, and I think, I don't know what it was word for word in the update, but we talked about when it breaks, it's going to be violent, right? It's not going to be like a little mini push, little, $100 move. It was a decent $455 candle when it broke, big time. Right now, this pink line, because we were talking about this last night, putting the 100 EMA back on the chart as an interesting level, because we came down here, we did touch it, and then all of this trading happened on the 100 MA, and then came down here, and we sort of found support the daily close, right? And that was looking pretty good. And then today we just, blew right through it. So I took it off a while back and started using a 70 EMA, and I'm still in the process of sort of back testing how well that works and how it reacts to price. But it's a very, very, very lengthy process, and it takes a very long time. So in the meantime, I took the 70 off. I took the 100 off and took the 70 on because they were, very similar. But now, if you see the pink one now, I know it says EMA 5. Sorry, I haven't had time to rewrite the actual script. So that being said, if you do see it, it's representing the 100 EMA. All right, cool. So everybody should be cool with that. Chat is super quiet. I think it's just always bullish, unless like my chat's broken. So that's cool. We're getting a couple more heads trickling in here. So that's all right. Everybody might be a little hesitant. I know it's just me. No Jacob tonight. Sorry, guys. It's totally cool, man. You can still grab a beer and talk crypto. There's nothing wrong with that. All right, let's go back to the other chart and see what we're seeing. I like the dark background. But if you guys have a preference, maybe I'll put a poll out when we got some more heads on there. I mean, I could chart on a lighter background if that's better for you guys for the stream. Otherwise, I 100% prefer the darker background. For me, it pops. It's much easier on my eyes. But whatever, if you guys need something, then that's fine. All right, so we did close the trades, right? All the trades have been closed. And, with the kind of volatility, you don't want to get stuck. We had a time yesterday afternoon, I believe it was afternoon, and it was one at a time. Every altcoin dumped like 8 to 10%. And you don't want to get stuck. This is another reason why we didn't like having, 8 to 10 trades open, right? All signals all at the same time. And people feel obligated to take all those trades no matter how many times we tell them not to. They do. And then getting out of, a dozen trades, 9 trades, even like 6 trades, all at the same time, all while dumping 10% a pop. That's asking a lot of the manual traders. And I'm a manual trader. I know Jacob's a manual trader. And there are instances where, something like 3 commas would be, way more ideal. And there are circumstances why, I use it sometimes and why I don't. But regardless, for the manual traders to manually close 6 positions, 10 positions, 12 positions is a lot. And not only is it a lot, it's by the time you get to trade number 4, 5, and 6, you might be suffering 12, 13, 14, 15%. And that's for the people that, if you're a manual trader, you have to hover your trades on where you're the closest to. So if you've taken entry, but you're closer to your take profit, then your allotted asset is towards, those trades are towards your take profit as opposed to your stop loss. When you're trading close to your stop loss, then your stop loss in place. So you get caught in this weird limbo. Now, finally, we do have OCO orders with Binance, and I almost want to say, like my 2 cents, too little, too late, but it is what it is. Now we finally have them, and it's huge. It's a huge, huge, huge benefit because not having them is really a total nightmare. All right, so Paul says dark is good. Paul, you're on my team, brother. That's what I'm talking about. All right, like the white background for the stream. Brian, you're killing me. It's like one high and then a low. So it's like, it's like dodging the bullet only to fall off the cliff. All right, is there any organic volume in the market at the moment? What do you mean by organic? Do you mean new money, fresh money? Do you mean retail traders? Or are you saying the non-organic volume is just the makers pushing stuff up and down? So let me know, and then something we'll talk about. So anyway, this stream is going to be as similar as it always is, but it can be as different as you want it to be as well. We could do a lot of talking, a lot of crypto, talking as general, as a whole. And then, of course, we want to cover whatever charts. We don't have any open trades, so I could rifle down, a list of what moved, if anything, and then talk about those or possible setups. But as we approach Bitcoin, making new support levels and potentially going sideways, then some setups will reveal themselves. So as we look at something like this, right, let me get rid of this for now. And as you see from the volume profiler, right, we're hovering. That is our price, right? The volume profiler is dead set, locked it down, 94.80 more or less. That's your point of control. That was major resistance for this entire period. So a big smash down, push up, resistance, smash up, pull down for support. So we're just flip-flopping that one level. That's the key level. That's the level to break on the next daily candle, up or down, and then we get direction on where we're headed to next. This volume is really, not great, but this is, again, a 30-minute chart, so, don't expect all too much. Makers for volume, for your volume question. Yeah, it's a lot of makers for sure. It's still organic trading, in my opinion. It's not, it's not necessarily trading that we want to see per se. As retail traders, getting in and out of some of these trades can become a lengthy process, especially super low sat coins. But like we sort of showed last night, I don't remember which one we were looking at. It might have been Dent. Let me take a look at that real quick. Let's see, Dent BTC. So let's just zoom out. Yeah, I think it was Dent we were talking about. So Jacob was sort of explaining, the makers and how they're sort of dropping the price in and out and up and down. They're sort of just playing, each little level all the way up and all the way down. So a lot of the trading volume is, are, makers doing those same moves. And when it's interesting enough, I think that's where you see the organic retail traders. They're interested now, and they're coming in. They're stepping up to the plate. I mean, at that point, unfortunately, you're sort of feeding the the hands, right? You're just feeding the makers. Similar to like if anybody games and you're playing like a any type of shooter, right? And there's an alley, not an alley, but there's a lane, right? Like a sniper lane. And you see like your buddy go in there, bang, one shot. And then your next buddy goes in there, bang, one shot. And then you go in there, bang, one shot. And then you just repeat the process. What you're doing is you're just feeding them kills, right? You're just feeding kills. This is very similar. This is feeding them better cells so that they can get out. They can sell up here because they might have bought, this all the way down here. They might have bought this over here, and they're looking to dump it just a little bit higher. There's 1,000 different things that could have happened, but the idea is the same. They want to show you something appealing, and by the time you've learned the mistake, the dude next to you is just starting. And by the time he learns his mistake, the next dude's just starting. Now, it's not to say this isn't just a valid trade, right? You ranged out, you dropped down, you ranged again, you had another low, you had one area of interest where you popped up, you pushed back down again, and then you broke that level. So right here is where things got interesting, and then this is the pump, right? So big, massive pump. Now, this is on a daily chart, so if we were to look at this on like an hourly, we could see that probably only lasted a few minutes. And then once it was over, it's right back to business as usual, and it's time to dump. So, that's essentially what's happening there. Now, we are also seeing like the idea of the Binance exit pump. And what that is, like a lot of Binance coins, because nobody really knows what the deal is and where the volume will go, then you have to consider, if you're not going to see volume in some of these pairs again, then it's time to pump it up, get the best price you can, and get out while there's volume to get out. Because again, like always, right, if there's no one to sell it to, then you literally have nothing. It could say the value is whatever it is. It doesn't matter. If no one's going to pay that, if no one's going to buy it, if you can't sell your allotment of it, then you got a problem. All right, so this is the essentially, for the most part, the Binance exchange. You can see like a lot of things moved on the Bitcoin side as Bitcoin started to pull back up and then sort of level out and make a bit of a range. So, highly, highly, highly risky trades. But something like POA has actually been fairly consistent in making higher lows and higher highs for the last few days. So this is something that's worth looking at right here. Why don't we just scope this out and see what it's been doing? Clearly on the downside, we have levels. I love these levels of support as they pop in. So, I like to look at price action. I like to look at how a particular pair behaves, the people who trade them, how they react to MAs, how they react to volume, how they react to historical levels, how they react to fibs. And that just sort of gets me a little bit more in tune with the style that they're trading this. So we can see, during the way down, bit of a hesitation, a little pullback, right? Right up to the 7 EMA, dumped it. Actually, almost to the 9 EMA. Same thing here, push back up, broke the 7, stopped at the 9, dumped it. Same here, came back up. So what I look for is when this pattern is over, I'm interested. Not that I'm going to take a trade, it's just that's when I'll look at the chart a little bit with a little bit more intent. And you can see right here, the pattern broke. So you had a much larger push, right here. Well, I guess the pattern broke right here. This is a break and close above both EMAs, right? You never had that this whole way down. All right, so finally you broke a close. You got a bit of a pullback here. And then, bang, now you've attempted the 20. That's the first time, besides, before the first drop. So now I'm even more interested. Now we've danced around with the 20, right? We had one candle where we broke and closed. We lost it right here. We did break and close above it. Now we broke and closed above it again on the same candle that broke the 20. All right, so now I'm even more interested. So even though this action right here is kind of garbage, in context to what it was doing and what it's doing now is what I find interesting. This is what it was doing, and we're looking at it and we're like, wow, that's really terrible trading. This whole thing right here. Now all of a sudden we're doing something different and it's a little bit more interesting. So something like this would grab my attention. I'd say, all right, well, now we could do like a little bit of a channel here, push it up something like this. Say, okay, at least we have something to sort of work off of here. And if I like the low, and the low, clearly before this candle was ever printed, now I would say, okay, now we have something to work with. We got a low, we got a high, we got a higher low, we got a higher high, we got a higher low. We clearly have some type of micro trend. And a micro trend is just a trend within a larger trend. With this, you can look back up and say, hey, what did we do up here? Because we sort of had the same situation candle-wise, not with the prevailing trend. Right? Prevailing trend was very much down. So this is looking like a reversal. This is an idea where you might want to buy that 20. Sure enough, you pop up. Now, whether you knew to take profits at the 50 or at the 100 is anybody's guess. Right? That takes a lot more back testing and looking at the chart and seeing how it historically reacted. But I'm looking at the same deal right here. Trend comes down, support, big push, right? Big push to the 50, resistance, gone. Drop down, big push up. Now we didn't even bother. 20 and the 50 are out of the picture. Now we're dealing with the MAs. Big drop down. Consolidation, big push up. Right? We got the EMAs. Working on the 20, not quite. Come back down again, little sideways action. Big drop down right here. This is the first time things got a little strange. Break and close above, all right, for the EMAs. And you did that for a little while, right, a few days. Except none of these candles had any interest in doing anything. These are tiny, tiny, tiny candles in retrospect to current trading. Right, just for example, this candle was 11%. This terrible candle here was 4.7%. This candle here is 1.92, followed by a 0.94, 0.93, 0.47. So this is range trading. And there's not much to do here but wait for a break, either up or down. You get the break to the downside, and it's something you can short, you short it. Break to the upside, something you could long or buy, obviously, then you would buy it. So we have to go back to our prevailing for any clues or indications of what is going to happen next. And here we get it right here with this spike. Spike up, broke the 7.9, stopped out right at the 20. What does that mean? It means we're showing interest now, right? We're getting back. A little bit more volume, not much, but a little bit more volume push on here. When we come down, we almost do a double bottom, not quite, but it's enough to get some interest in. Push back up again. Now another one, another break, 7.9. Didn't quite get the 20, and almost broke, closed above. We may have, on this one candle, instantly dropped down. And again, we're back to these tiny little candles. So now you have to say to yourself, like, all right, is something going on here? Are we coiling? We do have a low and then a high, and then we have a higher low. And we have to say, all right, are we actually doing something interesting here or not? This is the one that really gets your attention. Break and close above the 20. Now, however, even though you lost it right away, bit of a false break, this shows the flattening of the 20, right? So before right here, you're coming down super sharp, right? Right here, you're starting to flatten out a little bit. Starting to actually bowl up the price, which means you're adding support slowly. Price is allowing the MA to come up underneath it and prop it up. So this is one of those situations where I think retail traders will be interested. So to go back to your maker question, this could have been a maker thing to establish it, and then a retail thing to give it a good push. And the kind of push we would expect on a coin like that would be similar to this sort of action. So kind of like a pump and dump, but, a little bit more thoughts behind it. So when we have this, we can say, all right, well, now at least we have something to look at here. So all right, we got a low side. We essentially have a trend. Yeah, that's kind of our trend. Do something like this. So we got a little bit of a channel here. We know that we have good breakout candles. It's 15%. So far today, 12.25. Right? This candle here, 9.5%. Now that's after close. Right? While it was doing that, let's see what it spiked up to. 29%. So we know, this particular coin has no problem putting in 10, 15, 20, 30% candles. It's whatever. You just have to get out and know when to get out. All right. So for something like this, right away, based off of what we just saw previously, I'm not looking at much respect to the 70. That's this blue line here. I mean, sure, you got some action right here. Right? But I think the big dog here is the 100. And this coin doesn't seem to have any issue with just giving us this big monster move up there in one shot. Now that's 67%. The safe play would be the 70, and that's 35%. But now we gotta dive in a little bit more. Just because this is interesting doesn't mean it's worth taking the risk. What are our actual levels looking at? What did we actually do here? Besides the higher lows, which are great, right? We need to actually get involved, right? We're trading underneath this trend. Is that important? Do we have other areas of support resistance that are going to be a factor come take profit time if this thing does go bullish, right? So we're going to have a level right here for starts. Yeah, so something like this. We'll make that red, like so. And let's just drop that down a little bit. Something like that. All right. Structure lines up with the 70. It's a much safer play. This is the first attempt at the 50. Rejected. Big rejection. Right? We just closed the candle down. We have buyers coming in. Expect another attempt at the 50 before a pull down to the 7.9, which is this right here. Now, if you get the the drawdown, if you get the pullback here, right, and you find support, then that's something I'd be looking to long with a target at the 70. Now, why do I say it'll come down to the 7? What would make price where it is right now at 165 or 166? What would make it come down to 155? Well, look at the history of trading for this coin. And within this run, find me how many times you didn't interact with the 7 or the 9. Good. Good. Oh! All right, we didn't hit it here. Fair enough. One candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. And we'll count these 3. 18, 19, 20. We'll call it 21. 21. And so that's 4. So 4 out of 21 candles, right, did not have a reaction with the 7-9. Generally speaking, those fast EMAs are very much little support levels, especially on like the hourly chart. You know, these are like little support levels that, you know, you like to just get a little touch and then you move on. You see, like, it's a wick, it's a wick, it's a wick, right? This is a wick, it's a wick, it's a wick to it. It's a wick from it, a wick from it, a wick from it. You know, a wick. This is an entirely different ball game, but it's not completely unusual to see something like that. All right. So you could do targets a few different ways. You know, I like to do this over here, where I take like the first big, you know, the first big move, and I have myself a little target thing over here with just the extensions on them, and it just makes it easier to see. Right, so a 1618, typical, right? This should be a no-brainer for this particular move, and that's sitting around 188. The 2618 is very interesting because this is not sat for sat, but it's in confluence with structure high. It's gonna be above our 70 by quite a lot, so there's not super confluence here. But it is, of course, a ranged out zone, something to look at. More so for structure. And 423 is usually, you know, depending on the size of the move, 423 is a very nice target to reach before heavy consideration that you need to reevaluate that trade. And that happens to sit right here on structure highs before a break. Now, you do have a lot of structure highs, structure high, structure high, structure high, structure high, structure high. Any one of those would be a valid consideration for a reaction. The really important one here would be this, and unfortunately the 423 just didn't go that high. But if you came down like so, you'd be looking at structure support, right? Which was again structure support, which turned into structure resistance. You'd like to see an attempt. So very possible that you get a wick. You know, if this is to go and trade in this situation, very possible that you get a wick up all the way up that high. And the other thing you look at here is patterns and see if anything's really showing up. So, you know, clearly we got like a little bit of a channel here. If you wanted to get kind of creative, because this really isn't a triangle, but I mean, if you wanted to sort of call this an ascending triangle, you could. You got a touch at the top, a touch at the top, a touch at the top, resistance all the way across the board, and price continues to make higher lows. So technically speaking, sure, it's good enough. It checks all the boxes. The clear invalidation level would be right here. So if you were looking for breakout plays and buying pullbacks, that's your breakout candle, break and close above, push back, find support, buy the support, which lines up with our 7 EMA, which would be another idea of why you would want to rebuy there, and then, you know, break it to further upside. Other people that are a little bit more conservative, other traders, would like to break and close above the 50, since that was your rejection point. It would also be confluence with breaking and closing above this little channel right here, which is like this new trend line. So if you did break and close above that, sure, it eats into the gains a little bit, but it's a little bit safer of a play. All right, so I've been just talking. So let me check the chat here real quick, see what we got. Let's see. You think BNB is good? Do I think BNB is a good investment now at this cheap price with upcoming futures, Binance, and lending? Well, let's take a look at BNB. BNB is a very interesting coin. All right, so yeah, your guys' heads might spin with this chart. This is where, like, I have a lot of ideas and you know, like a master thesis on this, and I don't really want to expose you guys to the light show, nor do I want to delete what I have. So we're gonna do a fresh chart. Oh, see what I'm saying? It's bright, right? All right, and we're gonna do the USDT pair because, to be honest, I believe that has more relevance for this particular coin, as opposed to the BTC pair. Of course, you want it to be strong on the BTC pair, but BNB is going to stand on its own, and that's why I think it would make more sense to chart USDT, because as a utility token, right? If and when there is a decoupling, then BNB should be able to stand on its own, just by that alone, just as a use case, as a utility. That's all. All right, so let's take a look at this thing. BNB. All right. Well, I mean, clearly we have, overhead, support, not really support, but you do have a trend here. Let's get rid of our MAs for now. Even though you can see we just lost like our big major 200 MA on the daily for the first time. So that's kind of like a huge deal. A little bit. Let's get rid of this. Let's do this. Let's do this. Okay, so now let's take a look at this. All right. Generally speaking, when I start a new chart, I like to start at the monthly, go to the weekly, and go to the daily, and move my way down there. Just want to throw these two lines on first, but I do think that would be a fun little exercise in TA. So we'll do that in just 1 second. Let me just make that, I guess, black. It's weird because like every indicator, everything is set to having a dark background. So like even my MAs and my RSIs, like everything's like inverse. So in my head, I would typically grab like red here and then green or white down here, but whatever. Long story short. All right. Let's take a look. Here's what we're going to do. Monthly chart. And let's see major levels. I like to just know what we have. Not to mention, look how easy it is to understand, eliminate all the noise. Price came up, found a high, found support, found a high, pulling back. So right here, without doing anything, the most important level for me is this. Just right off the bat. That's a monthly high. See now I want a level, I want a color here. Well, whatever, we'll just do red. I want to retest this level. Now, that's just the high, right? Typically, you're going to get the body. And you can see this level I got the cursor on right now. That makes the absolute most sense because it was resistance 1, 2, 3, 4, 5, almost 6 months in a row. Not only that, right, but that particular level, you needed 1, 2, 3, 4, 5, 6, 7, 8 candles. So 8 months just to revisit it. And when you did revisit it, you smashed it. All right. And I love seeing that. I love seeing like when you do finally break the level, you smash it. You don't just like accidentally creep up over it. No, you make a very good effort to get over it. Now, the interesting thing is look at the high and look at right where that candle stopped. Right on the high. All right. So we can already tell that this respects wicks, right, as well as bodies. When you came back down, you got a little bit of a retest here. Not too much, but really enough for top side on these candles. But still, my next level, I think, would be body high. And if we match something here, yeah. So this is the wicked out attempt, right? That's your original swing fail. While price did continue. Yeah, price continued up. So your original swing fail is actually right here. All right, so you can put that line on here as well. Grab the extension, little ray tool, bang, bang. Okay, so now we're starting to paint a picture, right? The picture is structure. The picture is this. Up, down, up, down, up, right? So what does that mean? Right? This is sort of like just structure, just price action. But you can see as you make a high, you do a pullback, you pull up, you make another high, and you do another pullback. And that pullback, more often than not, will find support on previous structure, which is this. So without putting too much thought into it and getting bogged down into the noise of the weekly and the daily and the 4-hour chart, I would just say $17 is a buy target. $14.94 is another buy target. So this would be a buy zone. This range would be a buy zone. And I say that based off of the monthly chart, based off of structure, based off of previous action. Now while we're here, we do this. All right, we grab our fib and we go low, right? And we'll take that to this high right here because I want to see what this pullback was. So we'll take it to the high, or whatever. We'll just do that for now. So it's all magnet and stuff. 6 in the 886. So really like an overall, a horrible level, right? There's no rhyme or reason to that at all, unfortunately. Now, if we were to take this down to this high, does this make more sense? Are we not using this wick here? Let's find out. A perfect 786. A perfect 786. All right. So something to keep in mind. They didn't respect this upper wick, but they absolutely respected this high. So now let's take this high, right? And we want to do two things here. One, we'll leave it as is because this is global, right? We say, well, a 786 pullback here on the global would be insane, down to $8.92. But what I want to see is where do these levels line up, right? On a global side. What kind of pullback would that be? A pullback to a 618 at 1543. That makes me feel pretty good. Now, let's get the local move. This is the local move. What would that pullback look like? Okay. The upper portion, 1767, that lines up with the upper buy area. What does that mean? Another 618. Perfect. The lower level, 706, that's lining up with 14, it's kind of a little hard to read, 1450 or so, just underneath the lower target zone. Perfect. A 786 over here would bring it down to 1171. That might be a little too low. All right, but, certainly a possibility. Okay, so now that we have all that jazzed out, we're cool, right? Swing fail. It's this guy. If we were to come down and test the swing fail this month, right, which would be an intense candle, you're looking at coming all the way down to $6.20. If you're testing next month, right, that changes, $5.80. So at some point you have to decide, where is this thing more likely to find support? And I think more likely to find support is going to be structure highs based off of the way up. All right. As opposed to a swing fail, not to mention a swing fail on a trend where they didn't even use that wick on the fib to get the low. All right. So to answer your question without even going into any other charts, right? Just a monthly, I would say no. I don't think it's a good investment at this particular price, because I would imagine price is going to come down much further. Try to remember that as bullish as lending and margin trading is, think about who their audience is today. And their audience is up in limbo. The U.S. customers know that they're leaving if they haven't already left. So that audience is listening with deaf ears. They don't care about your lending and your margin and whatever the hell else you got going on. They couldn't care less because it's a non-factor. They're not going to do anything with it. For the people that can still trade on Binance, that are unaffected to the point of nothing changes to their account and they can still trade on .com, they have to worry about how much volume is leaving Binance with US volume. And the answer is nobody knows. And we've talked about this to great length about VPNs and who knows what and how much do they really know and how much volume is actually there. And the fact of the matter is nobody knows. CZ himself has no clue. We have no clue. Your best bet would be government agencies. And even then, with the amount of VPN usage, it'd be very, very, very difficult to actually nail down where these wallets are tied to, where that wallet came from, pushed in X amount onto the trading platform. We know what the trading volume is, or so what is reported. Whether even that's right or wrong, that's something CZ would know. But to know how much volume is coming from a certain country, dude, no clue. No way. Not a chance. You can't even trade right in China, right? What do you think they're doing? VPNs pointed to American addresses, right? They could have VPNs pointed to anywhere. But you got a ton of people in crypto that by default use VPNs. If you're on Opera, if you're on Tor, you're using a VPN anyway. You might be showing your volume coming from Canada or Switzerland or Brazil, whatever. Doesn't make any difference. Just the fact that you can't nail down where it's actually coming from, and that's the problem. So for those people, are they buying into a shaky investment now? I think, yeah. I think you really need September 12th to come. I think you really need to see how the volume reacts on the exchange, and how the listed pairs that are on Binance that aren't on U.S. exchanges like Bittrex and Kraken and Polo and Coinbase, how they're trading, who's stealing the volume, who's benefiting the most from that volume, and is it even volume that makes a difference? Or is U.S. volume 5% of Binance, or is it 55% of Binance? Huge difference. 5% and nothing really changes. The damage might already be done because we could see volume lately has been garbage across the board. But that doesn't mean that it won't flow back, once there's stability back for the makers. We have, as retail traders, we sort of have to gravitate to where the volume is so there's liquidity so that we can get in and out of a trade. That being said, makers rely on retail traders in order to fill their bags. All right. So if there's no retail traders, the makers are just making liquidity for themselves, and there's nobody to trade with them. So they go on to exchange, say, I'm going to make it liquid. They make it liquid with $100 million worth of nothing, and nobody buys or sells from them. So it's just them trading with themselves, and it doesn't work. So there has to be interest on both parties. Retail traders want to go somewhere where it's liquid. Makers want to establish a market that already has retail interest, so that they can have a relationship. And we don't have that yet. And I got to be honest with you, I'm really disappointed in every exchange, every possible crypto exchange available, 350 plus exchanges, and I gotta say I'm disappointed in every single one of them. Not one, to my knowledge, has made any effort to capture the audience at the most optimal time in crypto. Crypto's 10 years old. Binance is 2 years old. It's a super young market, but for whatever reason, it became very popular. And that's even not having OCO from launch, which is bananas and blows my mind. That doesn't make any difference. The point is, it captured a lot of traders. It became very popular. It became very liquid. It was a very good home for a lot of makers, which made it a very good home for a lot of retail traders, which made it an extremely good home for trading in general. Obviously, alts, right? Especially alts. So, that being said, when the announcement came out, if I was an exchange, I'd be screaming at the top of my lungs like, hey, like the donkey in Shrek, pick me, because you want to capture that audience. Now they're shook. They don't know where to go, right? So they're sort of waiting for someone to say, hey, we're kind of taking our party and we're moving over to X. And on X exchange, we can't trade this, and this. So exit pump the hell out of those on Binance so that you can get out of those. Start buying this stuff, and then you're going to be, trading different coins on this exchange. But very little effort on any exchange, especially established exchanges. Gemini has been around forever. Polo, Bittrex, Kraken, Coinbase. These aren't small exchanges, but in the global interest, or at least in the limelight, they seem to have been overshadowed for the last few years. And no one's really rocking Kraken hoodies and throwing after parties and talking about how cool Kraken is. Where, for Binance, that would be a no-brainer, even on like a Tuesday night. So there's a huge difference between interested exchanges, reliable exchanges, and then exchanges that are worthy of trading on. And for any exchange to just sit there and think they're just going to come to me just because I'm a great exchange, they would have been there 2 years ago. So my news to them would be, wake up, show us what you got, so at least there's some interest and people can start trying your platform. Where some of these people might need to make some fundamental changes to their platform, some UI UX changes, because let's be real, some of them just aren't that great. And just a little spice up here and there can really do a lot to grab the attention of the people that are now leaving one of the more popular exchanges. All right, so like clockwork, I went on a little rant there, and you guys got to be the benefit of it. Woohoo! Jesse Brown says, lighter background looks better on my phone. Oh, guys, come on. We need more Pauls in here. Dark is good. Yeah, let's do it. Right? No, not so much. All right, so anyway, that goes back to BNB. So, throw in your chat any quick charts, fire them off. Any quick questions, we'll fire those off, and then we'll close this puppy down. We were talking about trying to make these a little bit shorter for the playback guys. Like, it's awesome having a live stream where people can hang out, talk crypto, go through some charts, do some awesome stuff. But then all the people that are sleeping at 3, 4, 5, 6 o'clock in the morning, for them, when they go to rewatch it, it's tough to have them watch like a 3.5 hour or like a 3 hour stream. So we're trying to sort of back off a little bit, but get you all of the information so that you have it. So that being said, we do need to talk about dominance real quick, because that is kind of a key factor of one thing that we do. So dominance was pushing up this upper range here, and you can see like this little orange area, that's our range. We did push up and we came right back down. Now this is like, we didn't touch this box, you know what I'm saying? Like, we got these levels based off of this action over here on the high side, which ended up being a beautiful area right here as support when it did before the false break. Anyway, long story short, with this huge push up here and for it to get pushed all the way back down, this really solidifies that this is a range that, we're not the only ones looking at. This is important. This doji indecision candle from yesterday, that was during Bitcoin yesterday, hitting that support line and then just sort of like meandering, trying to make some higher lows on the lower time scale. And then we got some selling coming in today. Not selling. We have dominance dropping so far today. So interesting stuff to look at. Let's double check our corn over here and see what we're doing. So we sold right away. Let's see, open of the candle and started dumping down. Sellers came in kind of strong. We're a half hour into this daily. So let's go over the numbers for the actual daily and let's see what we did here. So daily, let's see, try not to destroy your guys' vision too badly. All right, so we opened the candle at 97.14. We hit a high of 97.17. So again, like I said, with the Marabuzos, like, that's a $3 shadow. It's like you basically can't see it on the chart. So very bearish. We had a low of 93.21. That's impressive. Our support level was 93.33, I believe. That's the top side of the support zone. So it did dip in there. And then, it did pull back a little, obviously, because we closed at 94.95. Now, sellers are coming in already. We can see we've already dumped, about 0.60, 56 bucks. So we'll see. That point of control is what we were looking at. That's that red line right there. A little easier to see on something like a 15-minute chart. Don't mind the clock. So that's that point of control we were talking about, right? And it's sort of like whoever can win that come the next candle, trade above or below it, that would be the target area to look at. And, from close, right? Is that candle? Yeah. So from the close, we opened up and kind of came right to the point of control before further downside. So very interesting stuff there. All right. Overall, nothing changes here. We're looking for a break in trend, which I think we got on this candle. Let's see, so we would have been looking at like a trend basically like this, just based off of previous price action. And we did break it here, push up for a retest, broke it again, push up for a retest, broke it again. Further downside is what we're getting right now. So I expect further downside. And that's it's kind of just based off of this little step platform action here. This is a pretty decent climb up. But, again, you lose trend, and what do you expect? You expect further downside. So we do have a couple, if we change our viewpoint a little bit. So this is okay, too. Obviously, it's not a legit trend line. This is just a visual aid. And you can see kind of like a false break, bit of another false break. This is a good break, retest with further downside, and then a huge buyback. This is a false break, and then over here, this could have almost been considered a false break. But then you had a dump, close, retest, push for further downside. So similar to this setup here where you broke and closed, push back up, you got the retest, you got further downside, then you had this massive candle to the upside, which I know is very difficult to see, but on the 15-minute chart, that's your 70 EMA right here. Okay, that's that guy. So if we were to lose that, you could see that level very well respected on the 15-minute. Okay, resistance, resistance, resistance. I would imagine we touched it here we did, right? This candle does go, the high was 95.25, 95.25 right here, okay? So the 70 on the 15-minute chart is very, very, very interesting. And you can see right here, bang, 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 resistance 4 times. All right, so something to keep an eye out for. Again, that's something that I'm not finished back testing, but that's the reason why I took the 100 EMA off for now. They were just too alike at the moment, so I needed more separation. So yeah, and that's that. All right, so let's see if Chad has any questions or any charts, and then from there, I guess we'll wrap it up. I'll probably have to start doing something like this for you guys to keep things a little easier. All right, white background is, geez, that's it. Poll's over. Poll's dead. Forget it. Poll's over. Let's see. Brian, yes, you're very welcome. Let's see. Good rant. Thanks. Awesome. Thank you for your explanations. Being new in crypto, I am looking for a short, medium-term investment that makes me accumulate some BTC. But until now, I am losing a lot with the SP signals. So, always bullish. Very first thing you need to figure out is, are you a BTC trader or are you a USDT trader? Very, 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 very different. If you are a BTC trader, you are a long-term trader, you are long-term bullish on Bitcoin, you need to not care about what the current USD value is. You need to remove that from your vocabulary 100%. You deal in sats and satoshis, and that is it. And every trade is to make more satoshis. Nothing else. No USD. You need to eliminate that from your thinking, and that'll clarify your goals going forward. Now, if you're a USDT trader, very different. You shouldn't be trading any Bitcoin or Bitcoin pairs because you're trading USD. You need value to go up, not Satoshi. You know what I mean? So you could have gained 50,000 Satoshi and lost 2,000 US dollars. So once you decide what you are, all right, so BTC trader, I'm looking long-term bullish on BTC. So have you lost Satoshis? Not USD. I don't care about your USD value. And you shouldn't care about your USD value either as a BTC trader, because that is not something we look for. We look for, as a BTC trader, you're looking to accumulate more BTC. So in other words, if you bought one Bitcoin, right, at 20K and price came down today to $10,000, you still have one Bitcoin. You lost 10,000 USD, but as a BTC trader, you don't care. You're not looking at USD value. You need to eliminate that from your thought process. And let's say you worked that one Bitcoin into two Bitcoin, right? By trading up and down the market while, the last 18 months was going. And now you're sitting on two Bitcoin that are worth $10,000 each. What does that mean? That means you have two Bitcoin, right, worth your original 20K. You went in with 20K and you're sitting on 20K USD. But what did you do? BTC, Satoshi. You doubled your Satoshis. So 100 million Satoshi plus 100 million Satoshi, now you have two full Bitcoins. If and when Bitcoin goes back to 20K, now your USD, if you were looking to find an area where you need to get out or where you need to pull profits, then you would have doubled your USD value. You know what I'm saying? Does that make sense? Let's see. So, but for example, I enter on INS and I lost BTC and USD value, don't even look at. You may have, but that can't be a factor in your trading. All right, you need to clarify that you have an actual base currency, and your base currency is BTC. So every trade you make and everything in your portfolio and every gain and every loss needs to be calculated in BTC Satoshi and not USD. Does that make sense? So if you lost BTC, that means you've lost Satoshis. So if you started the trade with whatever, 10,000 Satoshis, you exited the trade with 8,000 Satoshis, then yeah, you absolutely lost 2,000 Satoshis. But what a Satoshi equals at that time makes no difference. Zero difference. Eliminate that from your thinking, and that will really clarify the trading that you're doing and the types of moves you need to make in order to accumulate more BTC, right? We try to find trades that outpace Bitcoin. So BTC to BTC, otherwise you would just stay in BTC. Doesn't that make sense? Right? So if you're in Bitcoin and Ethereum is losing Satoshi value to Bitcoin, wouldn't you just stay in Bitcoin? Because Bitcoin is outperforming the pair that you're looking at. However, if you look at Litecoin and Litecoin is outperforming Bitcoin at the time, then what you want to do is move your Satoshis from Bitcoin into Litecoin. Now your Satoshis, the accumulations, not the USD value, the accumulation is going up because now the Satoshis on Litecoin are worth more, right? Each sat to sat is outperforming every sat of BTC. So when you go to buy back BTC, you'll buy more BTC with the same amount that you went in with earlier, because now you have more Satoshis. So you can afford more Bitcoin, right? And whether Bitcoin be at $7 a Bitcoin or $7 million a Bitcoin, as a BTC trader, it makes absolutely no difference until you're trying to realize your short, mid, and long-term goals. And if those goals are that I want to pull out 50% of the market in 5 years, or I don't want to touch my BTC until 5 years down the road, or until BTC hits 50K, whatever your number is when you can start tying USD back into it. But until then, it is sat for sat, and that is the only thing a BTC trader cares about. There's opportunities to be made on the USD side, but you really need to master one base currency before you start flip-flopping back, and now you become a USD trader during this market, and then you're back to a BTC trader during this market. There are ways to do that. They do get a little bit more complicated. So because you're new, right, master the BTC part, because that's your mid to long-term goal. Master that, understand the fundamentals of being in those trades and why you're in those trades, right? Again, INS, right? You might have lost, whatever, $300, $400 USD, but at the same token, you gained like 10,000, 20,000, 50,000 Satoshis. Why? Because at the time of that trade, Bitcoin dumped, right? Bitcoin went from 10,000 to 9,200 or whatever the case was, right? So the value, of course, dropped. So every single Satoshi is worth less than it was before to its USD counterpart. But you've now accumulated more Satoshis. So now when you're back to where that trade started, USD for USD, and Bitcoin's back at 10,000, right? Now that you're holding 50,000 Satoshis instead of 30,000 Satoshis, then if you wanted to compare it to USD, you would realize that you made money, right? In USD terms. It just took longer to realize because your base currency is moving every second of the day. So every time Bitcoin moves up or down as your base currency, it's moving all over the place. So you need to lock in where it is and what it's at Satoshi-wise, right? Satoshi for Satoshi, sat for sat. All right, so that's how we put it. You're either stacking sats or you're stacking cents. So if you're stacking sats, you're a BTC trader. If you're stacking cents, then you're a USD trader. And there are reasons to be one or the other. And of course, there's hybrid traders that it's a little bit more complex. But, we could take a day, like a Sunday or something, and we can go over that in a little bit more detail If there's enough people that would find value from that, we'll go over, reasons for being BTC, reasons for being USD, and reasons and how to execute a hybrid account, because it does get a little complicated. There's a bunch of numbers and different variables involved, but you can do it successfully. You have to be very diligent with journaling, and you have to be very diligent with your accounts. All right? Yeah, man, it does make sense now. Good. All right, see, that's why we rant. We talk and talk and talk until people learn something. So, yeah, I'm glad that helped. All right, well, in any event, we're going to call it for the night. We'll get the market update out tomorrow morning. We'll continue to monitor if smaller trades come up, like continuation trades, reversal trades, something where we get like a small rally, similar to that PO chart that we looked at, things of that nature. If they're not to the extent of a signal, they'll be in the channels, whether it's going to be margin channel or reversal channel, continuation channel. You'll see those trades there. So keep an eye out for those. Again, if it's going to be a signal, then you'll get the you'll get the alert, and then it'll be on the website. All right. Any other questions or anything like that? Drop them in the Discord, and then of course we'll talk about it tomorrow, and we'll move on from there. So for now, just sort of let Bitcoin decide its direction. What we're looking at least for now, is selling. So imagine that selling will continue, and we'll probably re-enter that support zone later. We got 23 and a half something hours to go. So allow it to find support. And if we get into the sideways market, that's where we might start seeing some of these altcoins start rallying. If they notice that Bitcoin goes sideways, then there's opportunities there for 10, 12, 15, 20% moves in order to do the 2 steps forward, 1 step back. Because if there's going to be further bleeding, some of these alts do need to cushion themselves, because they've already lost 90%, 95, 96, 98, 99%. There's only so much more you can go before you hit zero. So that being said, we've seen in the past big pushes up, 40, 60% cushion, only to lose 80, 90% of that on the next huge move. And that could be a situation that repeats itself this time around. We'll have to wait and see. All right, so I hope everybody has a good night. Yes, you are always bullish. You're very welcome. And then we'll take it from there. All right.